Preparing for a Procure-to-Pay P2P at Accenture interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is Procure-to-Pay, and why is it important for a business? Procure-to-Pay is the end-to-end process from identifying a purchasing need to paying the supplier. It usually starts with a purchase requisition, moves to purchase order creation, goods or service receipt, invoice matching, approval, and finally payment. In an Accenture-style delivery environment, I would stress standardization, compliance, and measurable SLAs, because P2P directly affects working capital, supplier relationships, audit readiness, and the accuracy of financial reporting. While answering, focus on the full process flow, business impact, compliance angle, supplier relationship impact, and why Accenture emphasizes standardized, measurable P2P operations for global clients. Question 2. Walk me through the complete P2P cycle. I would walk through it sequentially. A business user raises a purchase requisition, which is approved based on authority limits and budget. Procurement converts it into a purchase order and sends it to the vendor. Once goods or services are received, the receipt is recorded. The vendor invoice is then captured and matched against the PO and receipt. If it matches, it is posted and paid through the payment run. Make sure to cover requisition, approval, PO creation, supplier fulfillment, goods receipt, invoice processing, matching, exception handling, payment run, and accounting entries in a clear sequence. Question 3. What is the difference between a purchase requisition and a purchase order? A purchase requisition is an internal request to buy goods or services. A purchase order is the formal document sent to the supplier. The requisition captures the need, quantity, estimated price, cost center, and approvals. The PO creates the external commercial commitment, including price, delivery terms, tax, and vendor details. If the requisition is wrong, the PO and invoice matching can fail later, so data quality at this stage is very important. In your answer, talk about internal versus external documents, approval requirements, commercial commitment, system flow, and how errors at requisition stage can affect downstream P2P processing. Question 4. Explain two-way match, three-way match, and four-way match in invoice processing. Two-way match compares the supplier invoice with the purchase order, mainly checking price and quantity. Three-way match adds the goods receipt, so the invoice must agree with both the purchase order and what was actually received. Four-way match includes an inspection or quality acceptance document, often used for regulated or quality-sensitive items. Matching is a core P2P control because it prevents paying for incorrect quantities, wrong prices, undelivered goods, or rejected items. Be sure to mention what documents are compared, when each match type is used, typical tolerances, and why matching is a key control against overpayment or incorrect payment. Question 5. What would you do if an invoice fails three-way matching? First, I would identify whether the mismatch is price, quantity, tax, vendor, or receipt related. Then I would check the PO, goods receipt, invoice image, and system tolerance limits. If goods are not receipted, I would follow up with the receiving team. If price differs, I would involve procurement or the buyer. I would not force post the invoice unless there is proper approval, because bypassing controls creates audit and overpayment risk. While answering, focus on identifying the mismatch type, checking source documents, coordinating with procurement, receiving teams, and vendors, using workflow tools, and avoiding manual bypass without approval. Question 6. What are common reasons invoices go into exception, and how do you reduce them? Common invoice exceptions include PO price mismatches, missing goods receipts, quantity differences, incorrect tax, invalid vendor details, duplicate invoice numbers, and missing approvals for non-PO invoices. To reduce them, I would analyze exception trends by vendor, buyer, and category. Then I would fix master data issues, train vendors on invoice requirements, improve PO discipline, and strengthen receipt follow-up. The goal is not just clearing exceptions, but reducing repeat causes. Make sure to cover PO mismatch, missing GR, duplicate invoices, incorrect vendor data, tax issues, coding errors, root cause analysis, vendor education, and process improvement metrics. Question 7. How do you identify and prevent duplicate payments in P2P? Duplicate payment prevention starts with clean vendor master data and strong invoice controls. The system should check invoice number, vendor, amount, currency, invoice date, and sometimes bank account. I would also watch for variations like leading zeros, spaces, different invoice formats, or duplicate vendors. Before payment runs, exception reports should be reviewed. After payment, analytics can identify suspicious patterns. Prevention matters because recovery is slower and can damage supplier trust. In your answer, discuss duplicate checks using vendor, invoice number, amount, date, bank account, system validations, payment holds, vendor master controls, and post-payment analytics. Question 8. What is vendor master data, and why is it critical in P2P? Vendor master data is the central record containing supplier name, address, tax registration, payment terms, bank details, currency, contact information, and status. It drives how invoices are posted and payments are made. Poor master data can cause failed payments, duplicate vendors, tax errors, or even fraud. In a controlled P2P process, vendor creation and changes should be approved, documented, and segregated from invoice processing and payment execution. Be sure to mention vendor onboarding, tax details, payment terms, bank information, duplicate vendors, segregation of duties, approval controls, and how master data quality affects invoice and payment accuracy. Question 9. How would you handle a vendor complaining about delayed payment? I would first acknowledge the vendor professionally and ask for invoice number, PO number, amount, and date. Then I would check whether the invoice was received, posted, blocked, under approval, or scheduled for payment. If it is blocked, I would identify the reason and coordinate with procurement, receiving, or the requester. I would communicate the status clearly to the vendor and avoid promising payment unless it is confirmed in the system. While answering, focus on professional communication, checking invoice status, identifying blockers, validating payment terms, coordinating internally, documenting actions, and protecting both supplier relationship and process controls. Question 10. What is GRIR clearing, and why does it matter? GRIR is a clearing account used when goods are received before the supplier invoice is posted, or vice versa. When goods are received, the system credits GRIR and records inventory or expense. When the invoice is posted, GRIR is debited and the vendor liability is credited. Ideally, both sides clear. Open balances indicate missing invoices, missing receipts, quantity differences, or timing issues, so regular aging and reconciliation are important for accurate liabilities. Make sure to explain the goods receipt, invoice receipt concept, temporary liability accounting, common open item causes, reconciliation, aging review, and impact on accruals and financial statements. Question 11. What controls would you expect in a strong P2P process? A strong P2P process has controls at every stage. Requisitions and POs need approval based on spend limits. Vendor creation and bank changes should be independently reviewed. Invoices should go through matching, duplicate checks, tax validation, and approval workflows where required. Payment runs should be reviewed and authorized by someone separate from invoice processing. Good controls also include audit trails, tolerance limits, access restrictions, and exception dashboards for management review. In your answer, cover approval matrices, segregation of duties, three-way match, vendor master approvals, duplicate checks, payment authorization, audit trails, tolerance limits, and exception monitoring. Question 12. What is the difference between PO invoices and non-PO invoices? A PO invoice is linked to an approved purchase order, so it can be matched against agreed price, quantity, and receipt. A non-PO invoice has no purchase order, so it normally requires manual coding, cost center allocation, and business approval before posting. Non-PO invoices are common for utilities, legal fees, or one-time services, but they carry higher control risk. That is why companies try to increase PO compliance and reduce unnecessary non-PO spend. Be sure to distinguish procurement-backed purchases from invoices without purchase orders. Explain approval risk, coding requirements, matching differences, and why companies push higher PO compliance. Question 13. How do payment terms affect working capital in P2P? Payment terms determine when cash leaves the company, so they directly affect working capital and days payable outstanding. Longer terms preserve cash, but they must be agreed with suppliers and managed ethically. Shorter terms may be used to capture early payment discounts or support strategic vendors. In P2P, the key is paying neither too early nor too late. Accurate invoice processing helps the company optimize cash while maintaining supplier trust. While answering, focus on cash flow timing, DPO, supplier negotiations, early payment discounts, late payment penalties, compliance with agreed terms, and balancing savings with supplier relationships. Question 14. What KPIs would you track in a P2P process? I would track invoice cycle time, percentage of invoices processed within SLA, first pass match rate, exception rate, duplicate payment rate, on-time payment percentage, PO compliance, vendor query volume, and touchless processing rate. For finance impact, I would also review discount capture and aged GR/IR balances. These KPIs show whether the process is fast, controlled, and scalable. At Accenture, I would expect a strong focus on dashboards, root cause analysis, and continuous improvement. Make sure to mention operational efficiency, quality, compliance, and cash metrics, including invoice cycle time, first pass yield, exception rate, duplicate payments, on-time payment, and touchless processing. Question 15. How would you prioritize work if there are hundreds of invoices pending? I would prioritize using a combination of SLA due dates, payment terms, invoice value, supplier criticality, and discount opportunities. Invoices close to due date or affecting key suppliers would come first. I would also separate clean invoices from exceptions, because clean items can be processed quickly, while blocked items need follow-up. For high-volume backlogs, I would use aging reports, assign ownership, track daily clearance, and escalate recurring bottlenecks early. In your answer, discuss SLA prioritization, payment due dates, discount opportunities, blocked invoices, critical suppliers, aging buckets, high-value items, and clear communication with stakeholders. Question 16. What accounting entries are typically recorded in the P2P cycle? For goods, when the receipt is recorded, inventory or expense is debited, and GR/IR is credited. When the invoice is posted, GR/IR is debited, and the vendor payable is credited. When payment is made, vendor payable is debited, and bank is credited. For non-PO expense invoices, the expense may be debited directly, and vendor payable credited. The exact entries depend on the ERP setup, taxes, and whether receipt-based accounting is used. Be sure to cover receipt accounting, invoice posting, vendor liability, expense or inventory recognition, GR/IR clearing, payment entry, and how timing differs between goods receipt and invoice receipt. Question 17. How do you ensure compliance with tax requirements while processing invoices? I would ensure the invoice has the required legal details, such as supplier tax registration, invoice number, date, taxable value, tax amount, and correct entity information. Then I would verify that the correct tax code is applied based on vendor, location, goods or services, and local rules. If withholding tax applies, it must be calculated correctly. Any unclear tax treatment should be escalated rather than guessed, because tax errors can create compliance exposure. While answering, focus on validating tax registration, tax codes, invoice format, place of supply, withholding tax if applicable, ERP controls, escalation, and audit documentation. Question 18. What experience or understanding do you have of ERP tools used in P2P? I understand that P2P is usually managed through ERP systems such as SAP, Oracle, or Coupa, supported by Invoice Workflow and OCR tools. The ERP maintains vendors, POs, receipts, invoices, approvals, and payment data. My focus would be on using the system accurately, checking source documents, reading status codes, clearing exceptions, and generating reports. Even if the client platform differs, the core process logic remains the same, so I can adapt quickly. Make sure to mention SAP, Oracle, or similar systems if relevant. invoice workflow tools, OCR, reporting, transaction codes conceptually, data accuracy, and adaptability to client-specific platforms. Question 19. Tell me about a P2P process improvement you would suggest to a client. I would start by reviewing data to identify the biggest pain point, such as high exception rates or long invoice cycle times. If many invoices fail because of missing PO numbers, I would recommend vendor communication, invoice submission rules, and system validation at intake. If manual processing is high, OCR and workflow automation can help. The improvement should be measured through KPIs like first pass match rate, cycle time, and reduced vendor queries. In your answer, talk about diagnosing pain points, using data, increasing automation, reducing exceptions, improving vendor compliance, standardizing processes, and measuring benefits through KPIs. Question 20. Why do you want to work in P2P at Accenture? I am interested in P2P because it combines finance, controls, operations, and client service in a practical way. At Accenture, the attraction is the scale. Working with global clients, standardized processes, ERP tools, automation, and performance metrics. I would get exposure to real business issues like supplier delays, working capital, and compliance. I also like that P2P rewards attention to detail, ownership, and continuous improvement, which match how I work. Be sure to connect your motivation to finance operations, client service, process discipline, technology, continuous improvement, global delivery environment, learning opportunity, and Accenture's consulting and operations scale. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.